Good morning. Today, the purpose of today's video section is I get asked all the time, being an investor, what I typically look for in an investment deal. And more people ask about it. Real estate agents that I work with on a daily basis, they give all these deals away to other investors when in reality, they can be doing it themselves. One thing I want to do is I've got this calculator that was created a long time ago. And this is just for my personal, but it's from a formula that we plug into every day. And it's a traditional investor calculator from if you're looking for a flip, if you're looking for a buy and hold, if you're looking for cash flow analysis, cap rates, it's all done right here. It takes 2 seconds. When somebody sends me a deal, I go by a strict formula and I try to stick by it. Sometimes we tweak it just a little bit, but the numbers are pretty similar on every deal that we close on. So take a look at these numbers. And if you want access to this calculator, subscribe to my YouTube channel at Houston, Texas Realtors. Michael O'Neill, just Google that, YouTube it. I'll put a link down at the bottom. So if you haven't subscribed, subscribe. Once you subscribe, I'll email you a copy of this calculator and you can continue to use it as much as you want. And again, this is a traditional calculator. It shows everything from conventional financing to hard money loans, private money loans. Like, what do those numbers look like from your gains, your return on your capital gain, your cash on cash return? Some people work just off of that. So let me jump right into it real quick. For the analysis purposes, let's say that the market value of a house we're going to analyze is $250,000, right? So we think the appraised value is $250. Also think the market value is $250. The purchase price. So let's say it's being offered to us for $150,000. That is our offer price, and you can tweak those numbers, that offer price, depending. If these numbers don't make sense, you could come back and you can change this to 160 if you don't think you're going to get the offer, and see if these numbers work. Like, see if any of this makes sense. So let's put it in there. So we're going to purchase it for $160,000, right? Survey typical might be a little bit more now, maybe 500, but it should be close. Appraisal, that's probably more than that, but we'll leave it. Repairs, let's say it takes $20,000. Needs new carpet, paint, and some touch up. So $20,000. HOA, annual property tax on that one's probably a little bit low. So let's jump it up to at $250,000 for at 250 times 0.028, which is pretty common in this area. Let's jump this number up to $7,000. A house for $250 right now is going to roughly cost you $2,500, just from my experience in this market in Houston, Texas. Too many zeros there. Still got too many. All right, but you see, every time I plug one in, it's moving these numbers around. My numbers aren't looking so good over here right now, right? So conventional terms, inspection 325, conventional terms. If I plan to refinance this after 6 months, or if I plan to go into it and do a conventional loan, right now, here's what we're looking at. I've got to put 20% down. Loan terms 30 years. Interest rate, got to move that today. So being an investor, probably the best you'll get right now, even on good credit, is probably 6.7. And today is September 22nd, 2022, with all the craziness with the interest rates. Lender fees, that's probably a little bit low. So 0.067, I'm sorry. All right, so it's running up to 7 because that's probably where you're going to be at. Lender's fees, that's probably a little bit low. So you want to throw some of that in there. So let's just add $2,000. That's a negotiable term, right? So depending on the lender, you can negotiate those, but let's put it out there to be safe. These are pretty common. Mortgage insurance. I don't put mortgage insurance on my properties. You might need to, depending on your lender or what you're trying to qualify for, which product. But anyways, these are basic terms. Okay. So now the numbers are plugged in. We can come over at these numbers right here, go over to your conventional outputs. So your unrealized gain is going to be $62,000, right? So that seems like a lot of money. You're making a lot of money. This kind of works if you're looking for that strategy. At the same time, your annual cash flow, you're looking at $5,600. Return on capital gain, that's over a period of time. Cash on cash returns 8%. That's pretty low, my mindset. So here's something to think about. So let's say if you got to put 20,000 in it, let's pull these numbers down. Say you get it for 140. Let's say it needs, you're convincing and it's a convenience for the seller. They want to get out. Now your number dumps up to 10.2%. Well, now these numbers start making sense, and you can figure out what formula you go by in your strategy. If it's buy and hold, if it's flipping properties, on what this cash on cash return looks like. I don't focus too much on the cash on cash return, but I do pay attention to it. And it's never going to be negative. To give you an idea on a lot of the properties that I do, of course, before the last 2 years, they averaged, my cash on cash return was about 28% when I figured up all the properties that I ever bought, and which was a great return, right? We're in a position being real estate agents where those opportunities come to us first, and you should capitalize on them. What I mean by that is they're usually distressed properties. Seller wants to get out within a certain period of time, and it makes sense. They don't have time, they don't want to do the work, or they don't have the money to do the work, the property to bring it up to market value. That's what we look for. So anyways, this is a pretty cool little calculator, the cash flow in this one. If you work up these numbers, it's $512 a month. So, you know, a typical investor is looking for that 1% of the purchase price when you're looking at, you know, cap rates, or, you know, at the end of the year, if you pay $190, or end of the month, you need to be getting $1,900. Now that's pretty common in a typical investor in my local market in the Houston area, right? So cash out of pocket, like if you go the conventional route, you're going to have this much money to come out of pocket to go to closing. Mortgage, let's see here, hard money. If you're interested in hard money, not recommended, especially today with interest rates and the craziness in the market and uncertainty in the housing market in the next year. So, but sometimes does it make sense? It might make sense. Hard money or private money. You know, if you have a family friend that wants to get a better return than 7%, they want to go for 9% or 10%. That's hard money. That's private money, right? So if you do it off of this, it doesn't work, right? So this deal does not work for a hard money loan. It's telling you right here, you're going to lose your cash flow, $358 a month, until you get this hard money loan off of you, right? So typical hard money, what they'll do is they'll use somebody else's money to pay cash for the property because they've got this unrealized gain in the property. And after 6 months, they're going to use that as their sweat equity to get this 20% for a conventional loan, if that makes sense. That is how an investor keeps on moving forward and not tying up all their cash. Like if you put $60,000 down on every single house, well, eventually you're going to run out of cash if you don't pull it back out somewhere. That's what investors do. That's what a buy and hold investor does. We look at cash flow. We have to make it cash flow, but sometimes you take a loss in the short term to capture this gain. Does that make sense? So that's when you start playing with these numbers. You plug them in and you see if you can make these numbers work. And then you know you can feel comfortable on the deal that you're creating and you're going to be offering the seller. You won't feel bad about it because you'll know, because these numbers can't be close. It's 10%. I'm not saying you don't do that deal. You definitely do that deal the last 2 years because anything went up in value and we kind of knew it in the near future. Now I'd be really reluctant to do a deal like that. So this one would work for me, just to give you an idea. So monthly rent, you got to plug in. So on this one, you're paying $250. So right, what did I say? A typical investor, they want to get $2,500, which is doable in this market. So now let's see the numbers change. So cash on cash, all this changes, right? So you plug in the numbers on, oh, that's 25,000. That's wrong. So let's correct that. All right, now numbers look back. Now our cash on cash return is 27.2%. So this formula works. This property works. I would definitely make an offer at this price. Let's go back and change it to 160. Let's see where we're at. Now we're at 24%. I would do that deal. This magic number for me needs to be 20% or higher. So remember that 20% or higher. That's Michael's rule of thumb. I learned that from other investors, and that's typically pretty high. So I think being with the referrals that we get through other agents in the community, sellers that realize we purchase properties now that we have an advantage over the investors. So some investors that don't have those connections, they're going to have a lower number on their cash on cash return in most cases because the deals come to me first. They come to me before I offer them to somebody else. They come to the real estate agents before they go to the investor. And if you're an investor and you want to know how to find real estate deals, make friends with real estate agents. We're the ones that find a lot of the deals. And because that's what we work for and that's what we market for every single day. And if this is something of interest to you, Texas Houston Realtors is my my YouTube channel. Go and subscribe to it. As soon as you subscribe to it, send me a little message and I will email you a copy of this calendar and you can use it as much as you want to. So this is really good. Like a lot of people wonder, you can get online and find all kinds of calculators, but we're doing it every day. We've been doing it for years. We bought over 100. I bought over 100 properties in the last, 3 or 4 years. And I currently hold multiple properties and we flip properties. We always have something going on, but we use this calculator and these formulas to work off of. So I hope this calculator helps. If it's something you're interested in, subscribe to my YouTube, Michael O'Neill, Houston Realtor, Texas Houston Realtors channel. And I'll send you a copy of this and you can use it as much as you want. Thank you.